Are we at full position? Like, if we're blaming the speculators, like, is that real? Like, are there actually speculators more in the market? Like, what is positioning really heavy in some of these commodities?
By the way, that's the ironic thing. I like to say this market is long on conviction, short on position. The positioning in this market is very light. You look at oil, it's about average. Copper positioning is back to last July's levels. You look at agriculture, they're 20% off the highs. But more importantly, those numbers I just quoted are looking at the volumes over the last 20 years. So you're not even at the peaks of the last 20 years. Yet you look at copper prices, all-time high, grain prices, all-time high. So what I like to point out, you take those positions and turn them into dollars and take global AUM, the total amount of money out there to be invested right now, the numbers are just like this. They're just a sliver. So the overall positioning from a historical perspective, but more importantly, from a total AUM perspective, are incredibly light.
Can we make a distinction, though, between what's happening in the oil market and, say, the rest of the market, in that a lot of the metals are going to be used for decarbonization versus oil that needs to be decarbonized?
Well, over the very near term, all three are being caught up in the same dynamic because the green spending is creating stimulus. I like to say we're using green capex to solve income inequality. By the way, there's a history in the United States of doing that. What did FDR do? He built hydroelectric dams, whether if it was the TVA project or the Hoover Dam. These were green capex projects aimed at solving income inequality. So there's a long history of doing that, and we're doing that right now. So if you think in the context of this green capex as being stimulus, it benefits oil as much as it benefits the metals. In fact, we think right now, given the underperformance of oil could be the real sneaker over the course of the next 6 to 8 weeks.
What kind of demand profile and Iranian oil profile would that imply, though?
Our base case is that we see Iran start to come back in October, and given the announcement today that they're extending it until August, that could end up being early. So our $80 a barrel target in July is based upon a return in October, and that could even be delayed right now. In terms of demand, so far the rebound coming into the summer looks to be, on target. Yeah, you had that weakness out of India and the problems in May in Europe. But the U.S. trajectory is, at this point, jet demand is only domestically is only 13% below 2019 levels. And if we look at China, we're at an all-time high on jet demand. And because jet is the core that's lost. That's why we're banking on a big summer travel season to get that jet demand back. You get that back, we think you're going to be at 100 million barrels per day by November. Put that against no supply, these markets are tight.